I think we must always remember that the rand tends to overshoot either to the top or to the bottom, and I think in this regard we've seen this improved sort of global sentiment coming through. As we were saying, growth is starting to find its feet. China is not probably going to experience a soft landing. Commodity prices remain relatively resilient. South Africa's interest rate differentials are still fairly high and probably going to remain high on a comparative basis for some time. So we are constructive about the rand, and even though it has strengthened admittedly quite considerably this year, it's been one of the best performing currencies, we think that there's scope for it to strengthen right down to the 7 rand handle by the middle of this year. And again, I must highlight, a lot of this will be dependent heavily on global sentiment, because the rand remains closely aligned to the level of risk appetite out there, and provided that people are more sanguine about the global growth outlook, provided we don't see any more kind of ghosts out of the European sovereign debt front, I think the rand can actually continue to strengthen.
We've seen strong foreign appetite for local bonds year to date, a net inflow of 18 billion rand, and that offsetting the outflow from the equity market of 7.1 billion rand. Are you expecting this strong surge in foreign appetite for local bonds to continue in 2012?
I think that we have also come a long way in the bond space, and I think that the yield pickup will remain very attractive to foreign investors. We must remember that a lot of sort of long-term investors that bought our bonds in previous years actually didn't even sell off in the height of last year's sort of Q4 crisis. So there's a structural demand for South African bonds at play here, and I think we mustn't underplay that. But we have seen a lot of rebalancing of portfolios of the more fast money coming through this year, and I don't expect that pace to continue as rapidly. And I think in terms of the equity situation, we could very well start to see South African equities catching up with what we've seen in other emerging markets, because if we look at overall emerging market capital flows, a lot of the flows actually been going into the equity markets rather than their bonds. So South Africa is a bit of an outlier here, and if we can impress to the top side in terms of growth, then I think we could actually start attracting more equity inflows relative to bonds, and that would possibly be another fillip for the rand.
Sitting with your crystal ball looking into 2013, you're looking at a 12-month view on the rand of 760, and of course that in line with the market consensus. The high though is at around 920, that's what you're looking at, and the low of around 690, so the differential there widens. Give us some insight into your perspective on the rand in 2013.
Sure. So in the short term, we think the rand kind of possibly overshoots its fair value even to the downside, and then we start drifting higher because of the lagged effects of the slowdown in Europe. That'll start coming through in the trade flows, I think. We'll also probably see a lot more import demand coming through from South Africa in terms of capital expenditure. We've seen a big slowdown in infrastructure spending after the World Cup. We know that corporates are sitting on vast amounts of cash. We expect them to gradually and consistently put that money to work and import more capex-related products going forward as sort of the economy's recovery takes root. So in terms of our current account deficit, in terms of our fiscal balance as well, I think we might be under a bit more pressure there relative to some of the other emerging market peers, because their fiscal balances are really narrowing quite nicely and ours are proving to be fairly sluggish. Our growth outlook isn't as favourable as other emerging markets. So I think in the first half of this year, what we're witnessing is a rebalancing of emerging market portfolios. Towards the end of last year, we saw that brutal sell-off and emerging markets got sold off aggressively. Now we've started to see these investors come back into emerging markets, but we're going to reach a point when people are going to start cherry-picking which emerging markets they want to be in. And I think things like current account, fiscal deficit, and potentially even our relative growth differentials might count against us once those portfolios have been kind of rebalanced.
What are the potential pitfalls or simmering concerns that you have that could force you to become less optimistic on rand strength?
Well, if we had to have another down leg in global growth, any other global risk event, I think one thing that might spring to mind for many people would be the oil price. What happens if the oil price keeps rising? The question for oil prices is how fast they rise. It's the rate at which they increase. If we look at what's been happening this year, we've actually seen that precious metal prices, the kind of stuff we export, has been keeping in line with the rise in energy prices, more or less. So if we manage to continue those trends, then from a terms of trade perspective, we actually will be insulated to a degree from higher oil prices. But of course, if we have a huge supply shock in the oil market, oil prices jump up, it's going to potentially lead to risk aversion, and that is how it will negatively influence the currency. The other thing to bear in mind is, South Africa has got a lot of political developments taking place this year. So there could be some potential spin-offs from that, negative spin-offs for the currency. We haven't really seen that for a number of years now. So we would put that as kind of a background risk, because the rand has become very apolitical. But we are mindful that there are these political developments taking place this year. And then, of course, what happens in China? If China experiences a hard landing, which is not something that we pencil in, then it would bode ill for our commodity prices. So those would possibly be the potential risks that I'd be looking at.